G'day, I'm Anthony Landahl from Equilibria Finance. With the end of financial year fast approaching, I want to provide some tips and considerations for property investors to maximise their tax deductions, refund and financial position. I should comment these tips are of a general nature and you should seek professional advice from an accountant to apply it to your specific circumstance. So let's get started. Number 1, don't keep your receipts in a shoebox. Get your paperwork organised. An investment property can mean loads of paperwork, from rental statements, loan statements, utilities, insurance, lease agreements, and particularly if you have multiple properties. Having well-organised records will mean that claims are not missed, you can access documents with ease, and you will have all the necessary invoices and receipts for you when you meet with your accountant. Organise your information into financial years, then by property, and then further break it down into rental income, utilities, insurance, loan statements, repairs and maintenance, tenant agreements, and other correspondence. Number 2, maximise your tax refund. The simplest way to maximise your tax refund is to understand what is deductible and what is not deductible. And importantly, ensure you keep a clear and concise record of these expenses. Examples of common deductions include advertising for tenants, accountancy costs, body corporate fees and charges, council rates, water charges, land tax, cleaning, gardening and lawn mowing, pest control, insurance, building, contents and public liability, interest expenses, noting you can claim a deduction for interest payments only, not principal repayments. Property agents' management fees, repairs and maintenance, travel undertaken to inspect the property or to collect rent or for maintenance of the property. Examples of common depreciation expenses include furniture, carpets and curtains. Examples of common capital works deductions include a building or extension such as a new room, a garage, patio or pergola. Alterations such as removing or adding an internal wall. Structural improvements such as adding a gazebo, a carport or a sealed driveway or fence. Everything you could possibly need to know about deductions and depreciation can be found in the residential rental properties section of the ATO website. A tip for first-time investors: if you have purchased your first investment property, speak to your accountant to make sure you get your deductions right the first time. Take along to the meeting your purchase settlement statement, the loan offer document or loan disbursement schedule listing the fees you were charged to set up your loan facilities. Take along a copy of the depreciation schedule. If you don't have a depreciation schedule, ask your accountant who they recommend. Some other do's and don'ts include: you can't claim interest relating to funds used for private purposes. Conveyancing expenses that you incur during the purchase and selling process are generally not deductible. Instead, these costs make up part of the cost base for capital gains tax purposes. Travel expenses. You can't claim travel expenses for visiting a property when it's not the main purpose of the trip. If you have an investment property but also use it for personal use, for example a holiday home, or have friends, family living in the property for free, you are not able to claim expenses during that period of time. Speak to your accountant about whether you should apply for a PAYG withholding variation. This allows you to access the tax benefits of an investment property every week, and this can assist with managing your cash flow with the property throughout the year. Keep your investment borrowing separate from funds used for other purposes, so that when you are claiming interest, it is clear that it relates directly and exclusively to the investment property. And lastly, take the time to read through and check your tax return before signing it. If you've lost your receipts or paid with a credit card or EFTPOS, the ATO will accept bank statements as proof of purchase. And finally, take the time to find an accountant who's experienced in property, particularly around tax time, and next year you can claim a deduction for the accounting costs too. Cheers and have a great day.